Welcome back, traders and investors. We have Annie Logue on the line, freelance writer and consulting analyst, and author of Day Trading for Dummies. Annie, how you doing today?
I'm fine, thanks. How are you?
We're doing good here. Settled in on Tuesday here, looking for a Tuesday turnaround, as they say. Weren't we up like 47 Tuesdays in a row? Like, was that last year? We had that
Oh,
period where we
Yeah.
wrapped up. So,
I remember that streak. It was like 21 or 22. It was the ridiculous streak of Tuesdays in a row. It's
but
crazy.
But boy, I'll tell you, Annie, markets rallied up here, all-time highs on Thursday. Pulling back here, the broad market's tough to find some good deals. But are you finding anything in some of the penny stocks that you follow that may be of interest to our listeners?
Well, the one that I'm very intrigued with right now is American Apparel, which is APP, um, because it didn't used to be a penny stock, and it is now. It's at 88 cents. It's a company with a very strong brand name. They have a good reputation for the quality and design of their products, but the CEO, the former CEO, has long been very controversial and has dragged the company through some messy employment lawsuits. And now, of course, he was sort of more interested in flirting with employees
Yep.
maybe than paying attention to the finances of the company. And so I think when we look at American Apparel, and I want to talk really about penny stocks in general, because most penny stocks are in that situation where they're troubled companies. And so you're kind of betting on bankruptcy versus survival. And that's, it's a really interesting sector of the market because there are a handful of penny stocks that are totally fraudulent, right? The whole Wolf of Wall Street story where you find these shell companies and you pump and dump them. Okay, so we're going to ignore that sector of the market. Then the next sector of the market are businesses that are either were larger listed companies that are now suffering mightily, or they're smaller companies where the management is desperate for financing and they work with the penny stock brokers to raise money. It's not a very cost-effective form of raising capital, but if it's your last step before bankruptcy, some people will do it. So, and then there's a third group of penny stocks, which are company executives who seem to have really big egos and like the idea of having a listed stock, even though the business really isn't large enough to justify it. So the most interesting sector, I think, is that middle sector of the companies that are maybe going to go bankrupt, maybe not, because that's where you have less fraud, and it's where you have more opportunities to make money if it works out. Now, there has been some fraud in that middle sector of the market, and the FBI just had details of a big sting that they called Operation Penny Pincher. But in that case, the fraud was committed against the company executives who wanted to raise money. It wasn't against the investors. So it wasn't your Stratton Oakmont type story. I do think it's interesting, though, that all the attention over Wolf of Wall Street has almost made it seem glamorous. I'm always surprised by people who watch Wolf of Wall Street and then come back and they're like, yeah, finance, stock trading, it's exciting. And it's like, well, Gordon Belfort ripped people off. He's a crook. But what you're dealing with in that middle sector of the market, okay, so you've got stocks, because they're low priced, you can get in, you can, it's very small movements of 1 or 2 cents can translate into big percentage gains, and you can get into those stocks with fairly small capital commitments. And because there's a lot of uncertainty about what's happening, there's some constant there's enough news flow to give you some movement in the stock, and that's obviously what day traders want, right? You want to see some volatility, you want to see things going up and down. The risk, though, is that the companies actually do go bankrupt. So one of the questions with American Apparel is the company at 88 cents going to survive as a public company, or is it going to go bankrupt and the assets be sold to somebody else and it'll be revived, but the shareholders will lose everything? Because that's always the thing with the bankruptcy when you're dealing if the company goes under, the shareholders will almost always lose everything, right? So there are a lot of people, even longer-term investors who like to take a gamble on these types of companies because you can, fairly low price and, maybe the company emerges out of bankruptcy and everything, or excuse me, maybe the company avoids bankruptcy and your stock goes from, 88 cents to $8 and then you've made a huge return. So, that's what I think you want to be careful about. Excuse me.
Annie, how do you find the companies that aren't going bankrupt, though? Because so many of these, like you say, do end up going bankrupt. Is it like finding a needle in a haystack here, or you probably really got to do your homework, correct?
You want to, right. This is a sector where you want to know a little something about the company before you put it on your list to trade. And, it's often not difficult to just find basic news stories and, basic SEC filings. And do that and use that to create your list when you start looking at, say, the sub-zero stocks or the sub-dollar stocks. And it's really just the question is it legit or not? And what are we looking at in terms of our short-term, are we looking at something where there's going to be some fun short-term volatility to take advantage of? You don't want to short these stocks, though, because, again, the small movements can be killers, right? Because the small movements can be huge on a percentage basis. So, you short something at, 52 cents and then it goes to 60 cents and you've really had a big
loss. Big percentage loss.
Yeah.
What about the pot sector? The pot sector, you have quite a few penny stocks in there. Any of those on your radar?
Right now, no. I'm not being as helpful as you want. I know you guys like names. So I think the bigger thing is to just keep paying attention to what's happening. And it's also interesting because this is one of the few sectors of the market that's still where it's still possible to scalp. And that's where a lot of penny stock investors make money.
And I'm just going back to this American Apparel. Boy, it got a nice bump when Dov Charney is the CEO that you're talking about, and actually I think he's kind of doing some behind the scenes maneuvering. He sold he transferred or sold part of his stake, I think, to a hedge fund, so they're gonna try and get control of the company here. But it took a nice pop from just above 50 cents up to $1. Is this something that you actually played, or is something you're still in or looking to play?
Something I'm looking at. I was on vacation.
Oh, good
That's my
for you.
excuse. I mean, when you get into the dynamics of this specific company, Charney wants the company to survive because if it goes bankrupt, his stake becomes worthless, right? And so, because he's an equity investor, it's all the people that he owes money to who would want to force the company into bankruptcy. So some very interesting corporate drama. Some very interesting stuff to play out. But I think it's if you can get past the fraudulent stuff. A lot of the fraudulent stuff historically has been coming out of Canada. I am not sure why. It used to be the Vancouver Exchange, and now it's the Toronto Venture Exchange. I think if you see things that are listed on that, I would be really nervous. And, there is some electronic trading in pink sheet companies now, but I think I'd still be a little nervous about that just because it can be harder to find information about those companies. But there's obviously a lot of stuff on the OTC bulletin board, and I think that's where I would start looking for, doing my screens there, and looking to see if this is a company where there's some news flow, because as long as you have news flow, you have trading opportunities.
What about Radio Shack? This is a stock that just became a penny stock here about
Yeah.
2 weeks ago.
Yeah.
Yeah, and it's flirting, obviously. Once you start going under $1, then there becomes, once you're under it for so long, the exchanges will delist you. It is still listed here right now. Needs to obviously get its head back up above $1. Do you think this is one of those companies that actually can, find itself, turn itself around here? Or do you think this is the other, that's going to end up actually going bankrupt?
I think it's more likely to go bankrupt. I think American Apparel is in a better position to survive in some form because it has a good brand name. Radio Shack has a good brand name, but the parts that they sell, people can buy easily online. I'm not really sure what their business is anymore. I was in there recently buying headphones, and they were really pushing the extended warranty on headphones, like cheap, like $30. And I was like, "Whoa, this is crazy!" It's like, why would you buy an extended warranty on a pair of $30 headphones?
That they want to sell you for $15.
Yeah. It's like, well, wait. This is crazy. I think Radio Shack. I don't even know that they have great real estate. Like with some retailers, they at least have good leases or real estate that they own. But I think Radio Shack is one that's probably on its way down to zero. But you might have some fun with it, a penny or two at a time, because that's the name of the game here. So yeah.
I never buy warranties on stuff like that because there's a chance I'm going to lose it before the warranty actually expires. So
Exactly.
we've had Annie Logue here, freelance writer and consulting analyst, author of Day Trading for Dummies, talking about the potential profit and losses in penny stocks. Annie, thanks for coming on. Have a good trading day. We hope to speak to you again soon.
You are welcome. Thank you for having me.
Okay.